Everyone is watching Nvidia as the king of AI. But one of Wall Street's top tech analysts just called Tesla the most undervalued AI stock in the market and says it could hit $3 trillion in market cap in the coming years. That's more than a 2x from today's roughly $1.4 trillion valuation. In this video, we're going to break down whether Tesla is really an EV company with AI marketing, or a true physical AI monster that most investors are still mispricing. Quick reminder, this is not financial advice. My goal is to give you the full AI and valuation picture so you can make your own decision. If you like deep dives into AI, semiconductors, and real investing, consider subscribing. It really helps me keep making independent research videos for you. Let's start with the bold claim. Dan Ives from Wedbush, one of the most followed tech analysts on Wall Street, recently called Tesla the most undervalued AI name. He says we're entering the most important chapter ever for Tesla, the AI chapter, autonomous driving and robotics. In his base case, he sees Tesla dominating a huge chunk of the global autonomous vehicle market, with full self-driving adoption jumping sharply over the next few years. And here's the crazy part. With Tesla sitting around a $1.4 trillion market cap today, Ives believes it can head toward $3 trillion in the next couple of years if the AI roadmap plays out. When people think AI stock, they normally think Nvidia, the GPU king powering everything from chatbots to data centers. Dan Ives still calls Nvidia the godfather of AI, and demand for its chips is so intense that supply can barely keep up. So where does Tesla fit into this? Think of Nvidia as selling AI infrastructure, the picks and shovels. Tesla is trying to become the ultimate physical AI platform. Millions of cars acting as rolling robots, a Robotaxi network sometimes called Cybercab, and a humanoid robot named Optimus that Elon Musk believes could eventually become an incredible surgeon. Nvidia's AI mostly lives in the cloud. Tesla's AI goal is to control the real world, cars, robots, and even parts of the energy grid. If physical AI becomes the next major tech wave, Tesla is one of the purest plays on that theme, but with much higher execution risk than Nvidia. Every bull case for Tesla AI starts with one word: data. Tesla has millions of vehicles on the road sending back real-world driving scenes from cameras. Night driving, heavy rain, busy intersections, construction zones, everything. Instead of relying on expensive LiDAR, Tesla is training vision-based neural networks that try to understand the world like a human driver, through cameras and context. This isn't just theory. Tesla's full self-driving is already live in multiple regions and is slowly expanding. And the company is now talking openly about moving from supervised to more autonomous versions in very limited, controlled areas. This is what people mean by Tesla as a physical AI play. The edge isn't just having data. It's deploying AI at scale into millions of physical devices that are learning from the real world every day. Now let's talk about the part that could genuinely transform Tesla's valuation: Robotaxis. Tesla's dedicated Robotaxi, often referred to as the Cybercab, is meant to run on full autonomy and could eventually operate like a large-scale ride-hailing network. The idea is simple. Instead of just selling a car once, Tesla earns recurring fees from millions of autonomous rides. Dan Ives believes this autonomy business alone could be worth trillions over time if Tesla executes. Why does this matter for investors? Because Robotaxi revenue can look more like a software platform than a simple car sale. High margin, recurring, and very scalable. In the bullish scenario, Robotaxis can take Tesla from a cyclical automaker to a recurring revenue AI platform, which is exactly what supports those multi-trillion-dollar market cap arguments. If Robotaxis are the first AI startup inside Tesla, Optimus is the second and maybe the bigger one in the long term. Tesla has already shown Optimus walking, picking up objects, and performing basic tasks. Elon has said Optimus could eventually become an incredible surgeon and maybe even the biggest product Tesla ever builds. Tesla's goal is to use the same AI brain behind self-driving, but put it inside a humanoid body that can handle repetitive, dangerous, and boring tasks. Imagine manufacturing lines, warehouses, logistics, and later on, maybe even home assistants. Right now, Optimus is still early. Think of it as a pre-revenue moonshot baked into the stock. But if Tesla can produce these robots at scale, the revenue opportunity could dwarf the auto business over time. So does the math support those multi-trillion-dollar targets? Today, Tesla trades around a market cap of roughly $1.4 trillion. To move toward $3 trillion in the next couple of years, several things probably need to happen. First, Tesla needs a clear, credible Robotaxi roadmap. Paid rides in multiple cities, not just demos or small pilots. Second, full self-driving has to generate meaningful, growing subscription revenue, so Wall Street can treat it like a real software business, not just a driver assist upgrade. Third, Optimus needs to move from cool stage demos to real deployment in Tesla's own factories and with partners, actually saving labor and proving its value. Fourth, the core EV business can't fall apart. Tesla is facing serious competition, especially from Chinese EV makers, and margins have already been under pressure. If those four boxes get ticked, a 2 to 3 trillion valuation starts to look aggressive but not impossible. If they don't, then a lot of future success is already priced in today. I want to be honest here, this is not a risk-free story. Regulators are already watching Tesla's full self-driving closely, and timelines for full autonomy have slipped many times. Competitors in the US, Europe, and China are not standing still in autonomy or EVs. So how do I personally think about Tesla in an AI portfolio? For me, Nvidia is still the core AI infrastructure holding massive demand, strong cash flow, and deep relationships with every major cloud provider. Tesla, on the other hand, is a high-beta satellite bet on physical AI. If Robotaxis and Optimus really scale, the upside is huge. If they don't, or if regulation slows things down, the volatility will be brutal. In my opinion, Tesla only makes sense for investors who have a 3 to 5 year horizon, understand the AI plus robotics thesis, and are comfortable holding through big drawdowns. Now I want to hear from you. Do you see Tesla as an EV stock with extra hype, or as the most undervalued AI name in the market right now? Drop your thesis in the comments. I read all of them, and they often inspire future videos. If you got value from this deep dive into Tesla's AI chapter, hit the like button, subscribe, and turn on the bell so you don't miss upcoming breakdowns on Nvidia, AMD, and the rest of the AI supply chain. Thanks for watching, and I'll see you in the next one.